people, but can you help for the people listening along? What are the different types? So we've got ETFs. You mentioned mFunds or the unlisted managed funds, direct shares into companies themselves.
Yep.
Is there what are the other things that you've got on the exchange?
Yeah, so obviously everyone would be very familiar with direct shares. So that's buying a share in a company that's listed on ASX. So Commonwealth Bank or BHP or Afterpay. These are kind of names that people are very familiar with. Then we have exchange traded funds. They're increasing in terms of investors' knowledge of exchange traded funds. They're one of the fastest growing product segments globally, actually, in terms of their adoption by investors. And historically, exchange traded funds typically attract a benchmark. And what I mean by that is an exchange traded fund typically tracked, say, the S&P ASX 200 index or the S&P 500 index or the MSCI World Index. So they're very good to get broad exposure to a particular market domestically or around the world. But increasingly in that exchange traded fund world, we're seeing a move to there's more active strategies coming to market, more what we call smart beta strategies, which I can talk to as well, and those thematics that I was talking about as well. For mFunds are unlisted managed funds, so they're not traded on the exchange like you would a share or an ETF. An investor simply makes an application for units into the fund. So say an investor wants to invest $10,000, they'll invest that. That application will go through to the fund manager digitally via ASX's infrastructure. And once the investment manager accepts that application, then the units in that fund are put back onto the investor's account. So the investor can see the shares that they're holding in Commonwealth Bank or Afterpay. They can see the ETF units they are holding, and they can see the mFund units they're holding, all in that one account. And then we also have listed investment companies and trusts, which are also a very popular investment structure. They're quite different to the structure of an ETF or an unlisted managed fund in that they're what we call closed-ended funds. So this means that they don't continually create new units on a daily basis. There's some pros and cons to that. One of the pros is from an investment manager's perspective. They don't need to embed within their back office the ability to create new units or to fund applications and redemptions. The investment manager purely just focuses on managing the capital that they have at that particular point in time. Some of the cons with that type of structure is how they trade on the ASX. So because they're subject to supply and demand, the natural forces of supply and demand, listed investment companies and trusts can trade at a premium or a discount to their net tangible assets. So like all of these investment product structures, there's pros and cons to all of them. But at their heart, they attempt to give investors access to a range of asset classes that are typically hard to access, or to investment strategies that might be also hard to replicate yourself, or they just enable investors to be able to effectively outsource investment management to a professional.
Yeah, and obviously there's a lot of sort of complexity that sits behind the scenes there. So do take the time to educate. We're going to talk a bit about some of the tools that people can use for that. But essentially, what you're saying is, with a listed investment company, it's like they get a big pile of cash, and then they manage that pile of cash, and you can buy an actual share in the pile of cash or the pile of investments that sit underneath. Whereas with an mFund, it's like you're saying, I want this, and they say, okay, we're going to create it for you now. So you give them some money, they create units in their managed fund, and then invest that money in a way that's consistent with the investment strategy of the fund. And then we've got ETFs, which it's a little bit complicated because they are sort of traded on the exchange, but it's also, they're like a combination almost with managed funds, where they'll issue more shares to make sure that it stays around the underlying asset value. And there's some great videos online that sort of unpack it in a better way than I do, but we're creating bundles of these assets that investors can access to follow the themes or just get access to the market, as you say.
Yeah, that's right. I mean, the fundamental difference, well, one of the fundamental differences between ETFs, mFunds, and then listed investment companies is ETFs and mFunds are open-ended. This means that investors will be able to apply and redeem or trade on the ASX at or around the net asset value of that particular structure. Whereas the closed-ended vehicles, our listed investment companies and trusts, while they're traded on the exchange, they can deviate either up or down from that net asset value.
Yeah, and listed investment companies can be great because they allow the fund manager itself to manage the gains, and they're not forced to buy and sell investments when people want to buy or sell units. They're able to, they know what they've got to work with, and they can strategize around that. So I don't think there's one right size fits all approach. There are some slight and complex differences to the tax implications of each of the different structures. And I think that's something that's important for people to be aware of when they're going down this path, because if you don't know and then you invest and then you look back at a few years later, you might learn more over the time of your investment, but you might be in a structure that's a little bit inconsistent with the things that are actually important to you.